Good afternoon. On today's episode, it is Thursday, May 15th, 2025. We are going to be talking about what's really happening in the real estate market in the Portland metro area in 2025. There's some big insights here that are really important, and I think you're going to want to know about them. And so we're going to break all that down for you. So stick around. We're going to go through that. We're also going to talk about a Gallup poll that recently came out discussing what investments Americans are excited about. What are the best long-term investments in the eyes of Americans? So coupling those two together today, I think it's going to make for a very insightful episode of Real Estate Recess. So thanks for watching today. Shall we dig into the conversation? And if my office looks a little different today, I forgot my tripod, so I'm having to do a little something different. So you get the full view here, a little bit more zoomed out. But anyway, thanks for watching. Let's dig in. Let's not waste any time. We've got a limited time today, so we're going to kind of move through this as quickly as we can. But first of all, I'm going to share my screen with you to show you some data. This is information coming to you from the RMLS Market Action Report that came out that is talking about the data from the month of April. The way I like to describe this RMLS data is that it is rear view mirror. We're looking back in time to what happened in April and using that as a place where we can describe what's happening in the market, what we're kind of looking at. The Altos report is the other data we're looking at that's included in here. Altos is real time, so it's happening right now. The tricky part with this is the RMLS Market Action Report is for the Portland Metro, where Altos, we're just looking at Portland overall as just kind of the big economic engine for our region. It's a big city. There's a lot of industry there. It does tend to see the most economic weight. So we're just going to look at Portland. So granted, I know I talk a lot about South Clackamas County, the Valley, some of these smaller outlying areas, but at the same time, the trends that we're seeing in the Portland Metro are just as important as kind of our 10,000 foot view. We'll bring it around to a small town. So I've dug into that data as well. So let's take a look at this Metro Market Action Report. So on this little dashboard you see here, there's a little gold colored circle oval that says Portland Metro RMLS for April of 2025. So right now, according to that, our median sale price is coming in at around $546,000. And our average days on market is coming in at around 62 days. So which is interesting because I think that for a bit was going up and I think we've come down a little bit. Our inventory is at 3.1 months for those who haven't watched this before. And the basic explanation of that is it would take 3.1 months to sell all the houses on the market if nothing else were to be added to that list of inventory. It's what they call the absorption, how quickly those listings and that properties are being absorbed. Our pending sales, so those are homes that were up for sale. They've accepted an offer, they're under contract. Those are down 3.8% year over year in the Portland metro area. So if we compare April of 25 to April of 2024. So that's the basic snapshot. Usually that answers a few questions for people, which is those who are looking to buy or those who are looking to sell is what are houses roughly selling for on average in the area? How long is it taking and how much is out there? What's the competition like? So there's that piece. That's the metro. Remember, that's 5 counties: Yamhill, Clackamas, Columbia, Multnomah, and Washington. So those are the 5 counties that make up that metro report. So let's look at the area snapshot at the top here where it says Portland. It's kind of a greenish colored oval where it says Portland also Altos Research. So remember, this is more real time. So this is data available as of this week. It is trending current. This is for Portland. So that's all the zip codes that encompass Portland proper. So our median list price according to Altos, so median being the middle, half are more expensive, half are less expensive, is coming in, let's just call it $725,000. The median price of new listings, so homes that are new to market in Portland proper, $650,000. So a little less. Those are the new listings. So those ones that just popped on the market. The inventory in Portland is at 1,439 homes, and it says and rising. So that is a trend where our inventory is going up. Our average days on market in Portland proper is coming in at 85 days. So then we have market type. So according to Altos, they use this thing. If we look at the report itself, I call it the market speedometer. Kind of looks like a speedometer. I don't know how else to put it. But the further to the right it goes, the hotter and faster the market's moving. The further to the left it goes, the slower it's going, the cooler the market is. So right now, if you look at that speedometer, Altos would say 30 is that benchmark to say anything above 30 and a market action index is considered a seller's market. And an advantage to that degree, slight, moderate, severe seller's advantage, or to the left, it would be slight, moderate, or extreme buyer's market. So where it sits right now, it's at 44. So according to this, we are still in that slight seller's advantage category per the Altos report. And I would echo that with the absorption for the Portland Metro, the absorption meaning our 3.1 months of inventory. So that is saying that basically anything that the rule that we look at with this, or we tend to cite, is that 6 months of inventory is balanced. Anything less than 6 months is technically a seller's market. That's technically where we're at right now, if you follow that rule. So we still have seller's advantage, but depending on what area of the metro, the pockets, because real estate's hyper local by nature, we can look at this 10,000 foot view to get a general idea. But think of it this way, with everything going on in the economy right now, smaller insulated areas tend to experience those challenges or changes faster or first, more so than a larger economic center like Portland. So we can look at Portland proper all day long and say, okay, so it's a slight seller's advantage, our pricing, things like that are, it is what it is there. But if we compare that to some of these outlying towns, some suburbs, we might see a very, very different story. So don't look at this information and think that your house in Estacada, your house in Newburgh, your place in Woodburn is going to have a similar trend. You need to dive into those individual areas specifically and look at that data, because that is going to be a better indication of what's happening in your neighborhood and for pricing and activity in your area. So if you're getting ready to buy or sell, I think that's what is going to be the most important for you to keep in mind. So here's some more trends that are worth talking about here. So 41% of the listings in Portland have reduced their price. That's significant. That's a good number. We're trending towards 50% of properties have reduced their price. So there's some ambition there. There's some need to meet the market. Are buyers starting to push back? We will see our inventories rising. So you're getting my drift here. The market action index with Altos has dropped from 45 the previous month to 44 this month. So that means that our advantage towards sellers is slowly creeping this direction. Buyer activity is slowing, especially in mid and upper price tiers. So I think it's easy to argue anything in today's world that's considered a first-time buyer price point, probably anything under $500,000, or depending on where you're at, $550,000, $500,000 and less. Those are going to be very competitive price points. Those might tend to go fairly quickly and beating that average days on market in an area, typically speaking. But if you're looking at those mid price points, so $650,000, $750,000 and up, as mid to those higher $1 million price points and beyond, that activity is starting to slow. So we have pending sales being down year over year. We have our dropping market action index. We have a high percentage of properties that are reducing in price. Coupling all of that, putting all that together in this mixing bowl that makes up our market today, we have a rising inventory trend. Inventory is increasing. So what does that mean to buyers? Let's look at that. I've got that over here on the right, these buyer and seller insights. So what it means is that more listings mean more choices. So inventory is rising and 41% of homes are seeing price reductions. Buyers have leverage not seen in several years. The average days on market has increased to 85 days, allowing more time for decision making. This is very, very true. Strategically, buyers consider this as you're planning a purchase. If it's on your bingo card for this year, or you're thinking it might be there, know that interest rates might be challenging. It's tricky because our housing prices have inflated so much over the last 5 years. So that is tricky. The interest rates themselves are not historically high, but when we pair it with some of these other things, including the cost of living and inflation and our other things that touch our wallet every day, that makes it challenging. So that being said, if you can afford it and you're planning on it, and you're just trying to kind of figure out and navigate, well, when's the strike when the iron's hot type of a situation, I think we're approaching that. I think we're into that season right now. As inventory is increasing, buyers, you have more choices. You have longer ability to make a decision. You're not going to have to see a house and make a decision the instant you walk out that door because there's already 57 offers. Not to say that doesn't happen in some cases. We still see multiple offer situations. Again, you're going to judge this on a case-by-case basis, and you're going to know, hopefully your agent's going to help you figure that out going into this, if it's indeed that competitive of a situation. But I would say you're going to have some time to sleep on it. You're going to have some time to strategize with your agent. You're going to have some time to put things together with your lender so that you make everything pencil and present an offer that is going to help you achieve the goal you have, which is to buy a house for the best value you can possibly get. So know that you do have some more advantages. And people out there, the last crazy super duper seller market we've had is not great overall for our housing market. We need structures, or we need balance in this system that we have. We cannot have these far ends of the spectrum. The extreme sellers market we've seen over the last several years, going back in COVID time to, what was it, December of 2021, we had 0.6 months of inventory. That is a ridiculously low number. Comparing that to the crash years, let's say, I think it was January, February of 2009, there was a number out there that was something along the lines of 19 months of inventory. So that's an extreme, and this is an extreme. Those are not great things, really. The middle is a great place to be. It's good for buyers. It's good for sellers. There's some negotiation. There's some things wiggle room we can do there. All good. We need that. It's good for everybody. Properties still sell. Sellers still make money. Buyers are able to get into the house because sellers, you need those buyers. So sellers, let's talk to you here for a second. What does all this mean for you? So while technically it is still a seller's market, it is a market action index of 44. In Portland proper, the competition is increasing. So proper pricing is critical because overpriced homes are sitting longer. That is that aspirational pricing that I think we've talked about before, but I will talk about it again because it's worth saying over and over again until it connects with everybody out there. If you know your price is here, and let's say the market is down here, the market is doing this, but your price is up here, we're going along through time and the price is dropping, you are outpacing the market. Then you have to suddenly do this and chase the market down. You're going to have to make more severe price corrections to get to where buyers are actually saying, yeah, I'll pay that for your place. Conversely, if you say, well, the market's here, I'm not saying coming in down here with your price, we don't want to leave all the money on the table. If we come in just here, just below, and as that market starts to tilt towards a softening trend, you're going to hit the market where it's actually going. That is a critical piece for you right now. I cannot emphasize that enough. In addition to pricing sellers, those homes, those properties that you have, you can't just post and pray, which means throw a sign in the yard and price it. And you might have luck with that. But my suggestion is today, you're going to need to get that thing prepared. There's the P's, the 5 P's. Prior planning prevents poor performance. Okay. Give yourself time. A week out on putting a listing up for sale and expecting it done right is possible, but it's difficult if you have an agent that's going to be putting a lot of energy and effort into actually making your listing pop and sing great on the market. Be prepared to allow time. That's 5 P's. They work in the Marine Corps. They will work for you in getting your listing ready to go. So that means taking care of things, putting some work into your curb appeal, giving your home its best chance of a best foot forward. I know I've talked about this a lot, but I really, really want to emphasize this right now because I want you to be successful. I want you to go into this and be able to get the best price you can for your property in today's market conditions. I want you to find a buyer as quickly as reasonable without floundering on the market for months and months and months, because nobody wants that. It is very challenging. And I know from experience, I can speak to you from experience on this. It is very difficult to maneuver that as a seller when you've been on the market because you've been overpriced and the market does not see the price. More marketing doesn't necessarily mean finding a buyer. Your price has a very important role to play in all of it. It all starts with price. So folks, at the end of the day, the bottom line is we are a softening market. Our market is softening. Now, don't misconstrue what I'm saying to be, oh, the market's crashing. Chicken Little. No, the sky didn't fall and hit your head. We are softening. It is a return to where we may have been around 2019. So just keep that in mind. This is not doom and gloom. This is actually opportunity, because if you're selling your home, you need buyers who feel like they can buy your house, no matter what your price is. So a softening trend is good opportunity for you to actually find a buyer. It is good opportunities for buyers to buy houses. We need that to happen in our market. This is a silver lining on a cloud, and we're going to take it. All right. So that is the market action report. That is for Portland. I want to show you something here. Let me see if I can get that pulled up. And that is, I just want to show the report because I think it is a really interesting juxtaposition just to look at it real quick. It can be, but I have two others I've done recently I think are going to achieve the same goal for us. So let me get this in here for you. So our first one we're going to look at is for West Linn. So again, a suburb, technically in the Portland metro area proper. If you look at the metro boundary, here's what's going on there. And I think that this is also quite interesting. So obviously higher price points, all of that. In West Linn, if we isolate this local, hyper-local area, so folks who are in this area, take note, inventory is trending up. 34% of listings have a reduced price. Upper tier homes are sitting longer than mid-ranged homes. And you can see this market direction indicator. We are trending between balanced and cooling. So we're over here. Then West Linn specifically, this cooling trend, this softening has been happening gradually since early spring. So early spring, that's a newer trend. Probably within the last month or so, we've started to see this trend in West Linn. All right, so then let's take a look at another one that is local that I think will help you see. So, sorry, that is not the one. Bear with me here. Let me go present. Stop screen. Okay, bear with me. Sorry. All right, here we go. Here we go. This is for Newberg, Oregon. So this is a different, still a little bit more removed from Portland, definitely not West Linn. So here in Newberg, according to Altos, our median list price, $632,000. Our average days on market is 105. We still have a slight seller's advantage, but our inventory trend rising. Price reductions, 49%. So we are approaching 50% of listings in Newberg where prices have dropped. More homes are available, but it's still competitive for well-priced listings. I think that is the case overall. And of course, over here, you'll see this one-year market direction. We're over here between balanced and cooling, just like we were in West Linn. That cooling trend has been happening in Newberg since around the first of the year. In Canby, this trend has been happening since the end of 2024. So in various areas are hitting this softening trend at different times. But I think overall, it is something that's happening across the board. It just takes time in some cases for it to actually hit some of these areas. It's coming for Portland too. Portland, again, the bigger the city, the bigger an area, it's more insulated for longer on some of these economic trends that happen. Smaller towns, smaller economies. If you compare Portland and Eugene, for instance, Eugene is going to feel that a lot more. Smaller city, smaller economic hub. We're going to see the impact of some of these economic changes happen there faster. For what it's worth, that is interesting information I wanted to share here. What is Americans' perception of the best long-term investment by income? So, and I want to share this because right now, investments are a big deal for people. We've got a lot of talk about tariffs and where the economy is going. And are we going to be hitting a recession this year? Because Q1, we saw negative 0.3 growth in GDP, blah, blah, blah. What's really going on? I mean, that's a piece of 2025. Softening real estate market. What's happening with our gross domestic product? Are they tracking that? What's that going to be revised to for this year? So more to come on that. But according to Gallup, which of the following are the best long-term investments? So you'll see they've got real estate, gold, stocks, savings accounts, bonds, crypto, all the things that you might expect to see in one of these types of polls. They've also broken it down by income threshold, which I think is quite interesting. So they've got less than $50,000 a year. They've got 50 to basically 100K a year, and then 100K or more per year. This was done in April. So across the board, you'll see in green real estate here on the far left side of this chart for all three income ranges, from less than 50,000 all the way up to those higher income earners at 100 grand or better. All say that real estate is one of the best long-term investments. So it's very aspirational for these folks to have that investment in real estate. I think that's very interesting given everything that's happened with the economy this year, just everything with real estate, with pricing and interest rates. And even though a lot of people feel like it's out of reach, or at least in the near term, it's out of reach, it is still an excellent long-term investment strategy. I'm going to emphasize long-term. 90% of the time, it is not a quick turn and burn unless you are a flipper, a wholesaler, or something like you're doing those kinds of things. You're not holding the real estate for long-term. You have a different perspective on it. But by and large, if you're buying a property and it's your home, it's your primary residence, and that is the only real estate you own in your little portfolio, you're technically, in my book, a real estate investor. You have an investment in a long-term asset. And over the course of time, even through some of these bumpy patches, you can go back 60 years when they've tracked this data, and you can see on a chart where they've charted the lines where the recession, and you can see overall that real estate has increased in value as an investment over the course of time. And you can reasonably expect that for yourself too. Even if 2025, I'm not saying, not making any type of prediction, but let's say a recessionary period comes into play this year, 5 years from now, whenever it will happen, because they do happen. Real estate always comes back after the fact. So definitely over the course of time, take the long view on this, 10 years, 15 years. That is the sweet spot. You're going to start to really see the fruit of your investment in real estate. So not that it's a popularity contest, not that that's how you should approach your investing in any asset, but it's really interesting to parallel that poll with the talk of what's happening in our local market so far with real estate. So again, if buying a property is on your bingo card this year, I think we're entering a season where, as a buyer, you have the opportunity to really negotiate and get the most for your money. I really believe that. I think we're entering a really good time to be a buyer as time goes on. So there you have it. That is what I've got for you today. And of course, if you have questions or thoughts, I should have thrown this in there before. If you're passionate enough, and you've probably already left me a comment, but leave me a comment. Let me know what your thoughts are. Love to chat and have have those conversations with you in the comments. But otherwise, thanks for watching today. I'm back every Thursday. However, next week I'm on vacation, so we will not have an episode of Real Estate Recess next week. But looking forward to being back with you after the Memorial Day holiday to talk about whatever's new and whatever's happening at that point. But in the meantime, if you're looking to make a move around Portland's metro suburbs, South Clackamas County, the North Willamette Valley, what have you, I'm Jennifer Schurter. I'm your local real estate expert, and I'd love to help you navigate a lot of these things in the market to find your next investment in real estate, even if it's your family home. Have a great week and a great week, everyone, next week, and I'll see you soon.